Welcome back. In today's video, we're going to talk about something critical in trading: fundamental analysis. This is day 4 of your journey, and by now you know what assets are, how trades are placed, and the basic mechanics of a trading platform. But how do you decide what to trade and when to trade? That's where fundamental analysis comes in. It's all about using real-world information, news, events, economic data, to predict what will happen to the price of an asset. Let's break it down step by step. What is fundamental analysis? Fundamental analysis means studying economic, political, and social events and understanding how they affect supply and demand. For example, a positive GDP report may strengthen a country's currency. A war or oil supply disruption can drive crude oil prices up. High inflation may lead central banks to raise interest rates, affecting currency and stock prices. In short, real-world events move the markets, and fundamental analysis helps you stay ahead of those moves. Economic calendar. Your trading GPS. One of the most important tools in fundamental analysis is the economic calendar. This calendar shows scheduled economic releases like interest rate decisions, inflation reports, jobs data, GDP reports, and more. Each release has a date, time, expected value, and previous value. Moreover, you don't need to know all of them by heart. Under each event in the calendar, there is a short, understandable description. And the best part, it is written exactly what could happen if it is positive or negative. For example, if we look at the NFP, a higher than expected reading should be taken as positive for the USD, while a lower than expected reading should be taken as negative for the USD. Let's say the US is about to release unemployment data. If fewer people are unemployed than expected, it could mean the economy is strong, and that may push the USD higher. Tip: focus on high-impact news. These are the events marked with 3 dots or stars in most calendars. They often cause large price moves, especially in currency and indices markets. Examples of news impact. Let's take some real-world cases. Interest rate hikes. If the U.S. Federal Reserve increases rates, the USD usually strengthens. Why? Because higher interest rates attract foreign investors. Geopolitical tensions. Conflict in the Middle East. Crude oil prices often surge due to fear of supply disruptions. Natural disasters. An earthquake in Japan can impact the yen and Nikkei index. Forest fires in Canada? That might impact oil or natural gas prices. Corporate earnings. Big tech company announcing better than expected results. Stocks like Apple or Meta can skyrocket. Also, it affects the indices and they raise. This is why many traders check the news before they place any trade. Major events to watch. So, what should you watch? Here are some regular reports that you can see every day and try to exploit them. CPI, the Consumer Price Index, measures the change in the price of goods and services from the perspective of the consumer. It is a key way to measure changes in inflation. A higher than expected reading should be taken as positive for the currency. NFP, U.S. non-farm payrolls, measures the change in the number of people employed during the previous month, excluding the farming industry. Job creation is the foremost indicator of consumer spending, which accounts for the majority of economic activity. A higher than expected reading should be taken as positive for the USD. Crude oil inventories measures the weekly change in the number of barrels of commercial crude oil held by U.S. firms. If the increase in crude inventories is more than expected, it implies weaker demand and is lowering the crude prices. Interest rate decision. Traders watch interest rate changes closely, as short-term interest rates are the primary factor in currency valuation. A higher than expected rate is positive for the currency, but usually negative for the indices. Unemployment rate measures the percentage of the total workforce that is unemployed and actively seeking employment during the previous month. A higher than expected reading should be taken as negative for the currency. You can imagine if high unemployment, that means the economy is not doing well, right? These are only a few of the major events on the market. There are many more. You can see them every day and trade them. Volatility is an opportunity. Many traders love news events because they bring volatility, and volatility creates opportunity. Let's say there's a high-impact report in 10 minutes. Smart traders prepare with entry orders or adjust risk management before the news. Have in mind, news trading is not for everyone. It can be profitable, but also risky. Prices move fast. You must know when to stay out. How fundamental analysis can help you plan. Let's take an example. Imagine you're about to trade the EUR/USD pair. You open your platform and notice the European Central Bank is about to release an interest rate decision. The market expects no change, but rumors suggest a surprise hike. You decide, if they hike rates, the euro might shoot up. You prepare a buy entry order slightly above the current price. If the news confirms your prediction, you enter with momentum and you make money. That's how news-driven traders work. Combine with technicals. Even though today we focus on fundamental analysis, many successful traders combine it with technical analysis. Here's how. Use fundamental news to choose when and what to trade. Use technical charts to decide where to enter and exit. In Day 5, we'll dive into technical analysis, charts, indicators, trends. But for now, understand that news gives direction, while charts give precision. Where to find fundamental data. Here are some great places to stay informed. Economic calendars. All platforms has such. News feeds. Bloomberg, investing.com, CNBC, broker platforms. Many of them provide news and economic updates inside the platform itself. Always double-check the time zone of events and prepare early. Market sectors most affected by news. Let's wrap this section with a quick cheat sheet. Currencies. Affected by interest rates, GDP, inflation, jobs data, commodities. Oil, geopolitical news, inventory data, gold, inflation, fear, central banks, indices. Earnings season, economic growth, political instability, stocks. Earnings reports, product launches, CEO announcements. Summary checklist. Before every trade, ask yourself, is there any major news today or this week? Does it affect my asset? What is the market expecting? How will I react if the news is better or worse than expected? If you follow this checklist, you're trading smart, not blind. Coming up soon. Day 5, Technical Analysis. In the next video, we'll move into the world of charts, indicators, and trading strategies. You'll learn how to read the market visually and identify great entry and exit points. So get ready. We're combining the why, fundamentals, with the when and how, technicals. If you're ready to go from watching to doing, click below and take the next step. Until then, check the economic calendar, stay informed, and never trade in the dark.